So this video is dedicated to one of my YouTube subscribers. His name is Naveen, and he asked me to talk about a particular stock, which is Vimta Labs. So we'll look at that stock. I haven't looked at it yet. I do the scanning daily, but it never showed up in my scans. So probably I would have rejected the stock for some reason. And we will look at that now. And quick disclaimer, all my videos are for educational purposes. When I discuss any individual stocks, please don't consider as investment advice or buy sell recommendations. So let's go to MarketSmith. We will look at Vimta Labs. So I will write here. Yes, he wanted my view on this stock. Now, normally I don't give views because I don't give advice, but why not discuss it for educational purposes? So, the first thing that I look at whenever I open a particular stock, you see this red flag. Since there is a red flag here, it would not take me even a fraction of a second to reject the stock, no matter what is happening on the chart. I will not do all the technical, fundamental, comparative market analysis on this stock because there is a red flag here. If I click here, it says it's on the ASM list, so additional surveillance measure list. So I don't want to put my money in a stock which is in the ASM list. Now, what is ASM list? Just put it in ChatGPT. It will tell you what is ASM list. The only thing I want to mention here is the red flag in significantly increases the risk of the stock. But let's assume for educational purposes that there was no red flag on this stock. How would you approach it? Well, in that case, you would do your normal, this one. In that case, you will do liquidity analysis, comparative analysis, technical, fundamental, market. So let's do that. Let's do liquidity analysis. Okay. So it's this trading at 840 rupees. It's not a penny stock. Millions of shares are being traded. So liquidity wise, it looks fine. Then let's look at comparative. Price trend 95, fantastic. Accumulation distribution rating is A, fantastic. Group rank is less than 40, fantastic. What about the improvement in industry group rank? So there is an industry group here. So it says medical services. Let's go to medical services. So medical services. See, 6 months ago the rank was 80, now it is 10. So industry group rank is also improving. So all the factors are in our favor. What about market leadership? So I click here. Have a look at the chart of the sector. This is the chart of the sector. See, there is a big falling window here. There is some problem in this sector, I guess. And the sector is not in a stage 2 confirmed uptrend. Okay. So not very ideal. See, here it was in a confirmed stage 2 uptrend. Here, the moving averages are not in our favor. Click on stocks. Let's see where is Vimta Labs. So Vimta Labs is number 5. 1, 2, 3, 4, 5. So it's still acceptable. Okay. Anything in the top 3 or 5 is acceptable. So if I look at comparative analysis, the price strength is in the 90s. Ideally, it should be more than 80. It's very good. Accumulation distribution should be A or B. Group rank should be less than 40. The stock should be a market leader, I mean, in the top 3 or 5. And the industry group rank should be improving from previous 6 months. All the factors are in our favor. So, liquidity comparative is fine. And let's look at technical. If I expand this chart, click on consolidated. Have a look at technical. See, there is no base formation here. If you look at the current price, now thankfully, since I now have the SEBI RA license, I can show you the full chart with proper disclaimer saying that this is not investment advice. So the market is currently on and the page keeps on refreshing. You can notice that. But currently, if you see, the stock has already probably broken out of this base. So here there is no base at all. So I will wait for a base to form before getting into the stock. Now, you must have understood by now why I did not consider the stock at this base or even this particular base. Well, it was a red flag, so I just rejected the stock because of red flag. I am just discussing this assuming there was no red flag. You see there are blue dots here. That means the relative strength line is trading near its own 52-week high, which means the stock is showing strength. The only problem with this stock seems to me is the red flag. So I would reject the stock outright. But if it was not a red flag, this stock would have probably been in my watch list for sure. So technically, it is not up to the mark. The base formation is not there given these three candles. It's already broken out of this base and this base. Okay. Then let's come to fundamentals. Click on consolidated. You see, latest 3 quarters, the uh, EPS growth rate is not accelerating. So that is one violation. Latest 3 quarter sales growth is not accelerating. It's 19 and 19. This is another violation. Latest quarter sales growth should be 25%. Here it is 19. Another violation. So three violations here. Return on equity is fine, more than 17%. Earning stability should be less than 25. So fourth violation. Growth rate is fine, should be more than 25%. And it should be less than the quarterly growth rate. So there are four violations till now. EPS is at an all-time high annual, but there is a decline from 23 to 24. So this is violation number 5. So total 5 violations. Coming to margins, well, the margin is at an all-time high, 19.57. And in general, it seems to be improving. So no problem as such. So 4, 5 violations, which means almost 7 factors. 7 out of 12 factors in fundamentals are in our favor. So if I have to summarize, liquidity is fine, comparative is very, very good. The market is uptrend under pressure. Fundamentals are in our favor. So technical is not in our favor. So again, number one, would reject the stock because of red flag. Number two, technically it is not forming a base. I'm talking about current price, the current candle, not the previous candles, the latest candle. We have to wait till it forms 10 candles in the base on the daily time frame chart before we consider it. And it has probably broken out of the previous base, previous 2, 3 bases. So this is not the right time to get into this stock purely from an educational point of view. If we look at the chart, it is extended, does not make any sense. So I would reject the stock. So you understand the reason why I am rejecting the stock. Number one, it was a red flag, okay, which adds to the risk. Even if there was no red flag, I would still reject it because it was not forming a base. I would only do this analysis on a stock if technically it is forming a base, it is in a confirmed stage 2 uptrend. So probably we'll have to wait, give the stock some more time. Sometimes the red flag is taken out of a stock. Sometimes a stock that you own gets a red flag. So things happen in the market. So that is my approach. And how do you check market condition? Well, you go to MarketSmith. You just scroll, this is the home page. You just scroll down. You see current market condition is uptrend under pressure. You click here. From 18th of July, the market has been uptrend under pressure. It's been quite a lot of time. It's been more than a month that the market is under pressure. But this data, this page is delayed by 1 day. So the ideal place to look for market condition is you click here, scroll down. This is where you get the real answer. And by the way, this page is free. For to get the market condition, you don't need the premium version of MarketSmith. So that is how I approach. I look at liquidity of the stock. I do a comparative analysis. How is the sector placed compared to other sectors? How is the stock placed compared to other stocks? Are institutions buying? What is the market leadership within the sector? Is the sector itself improving? I look at all of that. I look at the fundamentals of the stock. I look at the chart of the stock. Then I look at the overall market condition. This is a proper 360-degree approach. It's a very objective, it's a very specific, precise, and a granular way of looking at a particular stock, which I have designed for you and for myself. This is what I learned from Mark Minervini and William O'Neill. If you look at the approach of people like Peter Lynch or Warren Buffett. Okay. Wait just a second. Where is my? Yeah, I'm here. If you look at the approach of Peter Lynch, Warren Buffett, and things like that, that approach is very subjective in a sense that you have to become like an investigative journalist to find out all the information about a company before you take a good amount of stake in a particular company, right? This approach is more precise, granular, objective in nature. That helps. So it takes me around 2-3 minutes to size up a stock. It takes me 2-3 minutes to determine, even less than 2 minutes, to determine whether the stock is worth my time or not. Right? So I would like to thank my YouTube subscriber Naveen for asking the question. It was a good discussion. Just follow the same thought process on every stock. You will be not missing a crucial information on any stock. This pretty much covers everything. It covers the stock, covers the sector, it covers the fundamentals, the technicals, the overall market condition, the liquidity. Everything is covered in this orange trading system. So if you follow this system, the odds of success will be in your favor. Okay. Thank you so much.